Morning traders, it's Matt here from the Forex Coach. We've got a trade on this morning, long dollar CAD. It's come down, it's got some divergences, so it's kind of a fairly short-term trade up to this sort of level with target price 2. This US dollar CAD has done enough here to be able to roll back down now and take out this low. So what I'm going to do is just close off this first half. It never quite got up to target. So what my plan is, if this does pull back down, then I'll add that half back in and just get a better entry price there. This dollar CAD has pushed up a bit, but I think I might exit this trade here because, as I said, it has got the potential to pull back. And if it does, then that'll be the better entry, I think, on this. Okay, just back, and we actually exited up here, as you saw on this dollar CAD, and it came off, which is what I was expecting. So I actually got bought back in and got another entry. So we've banked that profits, although very small, but it's just something that I saw on the charts, the potential for this pullback. And we got long again, so looking for a run up now. Okay, just back, and we see dollar CAD has gone up through our target price 1. It's having a good run here, so what we can do is we can now trail the stop up. Okay, I was just looking at the stop loss, but as I just came up to the 4-hour chart, I think that this has got the potential here to pull back again. I'm still curious. There's some moving averages, 50 period. There's also some stops that are going to be below these lows. So I think I'm just going to close this trade out here and take the profits on this one. Okay, just back, and we're now actually just taking a long trade on Aussie dollar. Okay, just back, and the Aussie dollar long was a stop out. Stop was possibly a bit more tight because it's just created this sort of divergence, and then it's pushed up. So the idea was there, but potentially the entry was slightly off there. So it was a stop out on that one. Hi guys, it's a short video today. I've not been doing too much recording and stuff. Been pretty busy doing other things, but anyway, Aussie's pushed up a little bit. I think that, you know, this has got the potential now to carry on with this this move down. So yeah, Aussie's had a bit of a bounce, bad entry on that. I've had some trades off it, to be honest, like I have a lot of these pairs, especially on these downward moves this morning. There's been some really good moves actually in the market. The CAD just kept going, unbelievable. We got out the CAD. You know, I got my overbought signal, I got my downwards arrow, but this momentum just kept going. Really strong move from the low of the day. I don't know, was that the low of the day? 7:30 on the 26th. What time is that? 5 on the 26th. So from the low of the day up to the peak, it's had a 96 pip move, ish. So really good move there on the CAD, and we originally were getting in long down here. So I mean, we could have held up for all of our targets, ironically, but that's just the way it goes. You know, I'm happy with a part of the move, even if I got 50% of a move, 30%, 20%, doesn't matter. You know, you're never going to maximise and take out all of the moves, and I'm not bothered about doing that. So it's come off. This could push up higher, diverge, push up higher, you know. Originally, when we was at this stage here, where this, bearing in mind this 21 period moving average was curved round, often when you get those, bearing in mind that the sort of downwards momentum on the 4-hour chart, etc., often when you get those, they can then sort of bounce off these, foul, return, and sort of carry on this move. It'd be quite interesting to have seen it got down to these levels down here and hit some of these moving averages, but it didn't. So an example is here. So we've got the 4-hour chart, the 4-hour trend down. It's pushed up, hit the 21 period moving average, and sold off. So, you know, I kind of thought, although the move's probably not as established and quite as big as this move over here, often you do see that. So I didn't call it, but I did say there is a possible setup for a short position in there, but it just busted through it anyway. But we took the Aussie dollar, and similar sort of thing in a way, and that failed anyway. So that's the end of that. I'm going to wrap this video up here. It's a pretty short video. I've actually had a very good day today. I've been pretty busy trading, lots of other trades other than obviously what I've done in the with a trading signal, but I'm 987 up today, which puts me for the month about 6k on this account, 6k up, so the return's looking excellent. So I'm now sitting, oh, it's actually put me 7k up for the month, and oh no, that includes part of January as well, since I moved over to this spread betting account. So originally when I started the signal in January, I started with something like a 10k account, and I took it up to about 15k, and then I decided that you know, if I'm going to be doing this all year along, I need to be taking this over to a spread betting account. So I took it over to a spread betting account and restarted this my FX book, but you know, effectively I lost sort of 3 weeks worth of trading, but I'm not bothered, because once this account grows towards the end of the year, you know, the 3k or 5k is going to be you know, probably what I'm taking some days, because I'm going to scale this up as the account grows. I'll be scaling in my position sizes, increasing those accordingly. Compounding interest, which is an interesting phenomenon and something that you need to take advantage of as a trader. One of the best investors in the world, Warren Buffett, is a great fan of compounding interest. So if you don't know about compounding interest and how the model works, then obviously utilize it. One thing to bear in mind with compounding interest is that if you, for example, said, oh, I'm going to compound 5% a month over the course of the next 10 years, achieving 5% today is a lot easier per month than achieving 5% 10 years down the line, because as account sizes grow, then the challenges of making that extra money percentage wise decrease, because position sizes are bigger. It just means everything's a lot harder psychologically, it's a lot more difficult, etc, etc. So doubling a small account, you know, doubling £1,000 account is easier than doubling £100,000 account. So what I tend to do is my compounding interest models that I do, and I just usually map mine out in Excel, and probably in a later video I'll show you an example of one at some point. What I do is I have a tier system so that my compounding interest percentage decreases each week or each month. Okay, so my compounding interest decreases. So for example, my current model that I'm using, my compounded interest target is something like 5 or 6% a week, but that reduces to the point where in 52 weeks time it's down to about 3%. So the 6% reduces down to 3% over the course of 52 weeks. So rather than having an exponential type equity curve, which is just going to give you huge drawdowns, so with the traditional model, your equity curve in theory will be exponential and would sort of rocket up like that, which is just, you know, anything that goes up like that is you've got to be ready for a big drawdown, a big crash. Mine would go up, not a straight line, but I would still have some sort of exponential growth, but a lot more gradual, so something like that. And then I then bank out and reset. So what I do, my model, I shouldn't really tell all my secrets, but what I do is, or what I've been doing is, I build accounts, bank money, and then invest money in long buy and hold type assets, which for me have purely been property. However, if we do get a decent equity correction or stock market indices correction over the course of the next 2 to 5 years, then I will look to buy in for long-term buy and hold investments. Again, a similar model to Warren Buffett, depending on obviously getting the right deals. But at the moment, I'm predominantly in residential property. I am going to look into go into more commercial property. I've also got solar PV investments as well, which was one of the best investments I've ever made. But long-term investments. So I build money, take capital. So build money using risk capital. Then take capital and put it into safe pots, so to speak, that are going to not grow massively over a short period of time, but they will grow over a long period of time. But they will return you, they will return money long term, and they will pay you each month, so to speak, whether it be through rents or through feed-in tariff payments, fit payments, or leases and all that kind of stuff. So yeah, that's the account. You can see there the growth and stuff like that. I hope you've had a good day.